Another day in the crypto wonderland. Billions have been liquidated in 24 hours, kicking out super greedy, highly leveraged positions and trailing stop losses. All of them were executed as usual in this market. This is about the volatility. If you held on to your assets, you are learning how to accumulate. You are learning what this market can do and how you can survive. The market just moved into a corrective consolidation mode. Individual assets have different stories to tell, but the altcoin market itself shows you how the average altcoin just moved. Now, if you look at that one, you understand how deep this particular candle went through, where it wicked. Now, as you go through and see these stuff, you also have to understand BTC just dropped somewhere close to 30k. BTC just dropped all the way near to 30,000, and that shows 50% dip is not a big deal in the crypto market, and it's usual. XRP also dropped hard along with the market, but now if you look at the price, you will see one stuff. We are still maintaining that pattern. So this is bullish. We haven't actually broken above this, broken below this particular level, but if you look at the RSI and MACD, right now the price is going down. The RSI is moving down, but the RSI is not in the oversold territory, and we are still following this downward trajectory here. Now, price reached this support, so we are still maintaining the pattern. So as the dust gets settled and the blood in the streets are cleaned, those who just held on to this realm of crypto right now, they are going to stay strong and their portfolio will move higher in value. Welcome to the Scientific Investor family. Now, days of chaos and crypto crash. Now, we didn't actually knew exactly this is coming. I agree, but those of you have already saw this now understands the market always works like this. So this video came out 3 days before, and this was like 2 days ago. The market was showing a little bit of signs that we are gonna go into a consolidative phase, and right now if you look at the general market, you will actually understand something similar. See, this is the altcoin market cap on a daily, and when you look at this, yes, we have already breached the moving average, and the RSI has already reached close to the long term support. So that's like the bottom of every drop here. Look back in the November drop and right now and in the March. So we have actually reached these levels and reached a long-term support level in RSI, which is like 35. Now if you look at the MACD, it's also reaching a support zone. So now what if you actually move in towards a weekly chart in the altcoin market cap? So when you actually move in, you are able to look at the market like this. This actually shows you different patterns happens, and sometimes before you get that last blow off the top, you kind of have some patterns. Now if you look at the market, we are dropping, I agree. Now what if we are inside this consolidation phase? This is the all-time highs back in 2014. Then here during 2016, we went above that all-time high and then created a new high again and consolidated there. Now the total consolidation range was like 330, 340 days. Now look here, we went above the all-time high. Then again, we created a new high and now dropping. Now this can be the consolidation phase as we talk. So all the way from here, that's from March, I've been talking about this, the possibility of a consolidation for long range 180, 200 or even 300, 350 days. And now here we are actually slowly moving into one. So as you look at this, the market can bounce, but in between you have to understand that here the market was like 175 towards 230% higher than the moving average. and right now when we just before we drop, we were like 280%. So now if you look at this, as we come down, the moving average is not staying still here, it's climbing to the upside, right? Because it's the running moving average. So as you look at this, we may get supported somewhere near the all-time highs, and that means when the market consolidates, some assets will move higher. Now that's individual assets. You'll have to look at what one particular asset is doing and then evaluate it. Say for example, BTC on a shorter time frame is looking like this, it's moving to the downside, fine, the RSI is there and you can see that it's nearing the support zone, fine. Now when the candle is going back and we are right now around 39,000, remember we dropped hard and we came all the way down near to that 31,000 mark. So say from the top, when we are considering the $66,000 which we put in, 30,000 is like massive drop. Now from there, the daily candle is moving to the upside, meaning there was a lot of liquidation there. A long wick in this crypto market is not something new. Now what you can see is if that daily candle is getting closed like this, a long wick, slowly we are going to go to the upside. Now remember, that's the March crash of 2020. Considering this one, that's nothing, because this is happening inside a bull run where you have actually moved from $4,000 towards $65,000, $66,000 in Bitcoin. So if you look at this in general, you can understand this is the time where we are breaking below the moving average on a daily. Now to get a bit more clearer perspective, we can move into a weekly one and then see, okay, now what are the odds that the market is kind of making the tops to move down. So last time we took like 1477 days from the top to create a new top. So where would that be? If you plot that, we are somewhere like this. So that's like December 2021 or somewhere closer to that, give or take. Now at the same time, you do have to understand this. Say the bull market started here, crossing above the moving average, right? So if you take that till the top, it's like 798 days, say 800 days. Now if you look at this, we came here, tested this once, we broke above this. So here is where our bull run actually started, right? So now we actually plot that and look at this, we came some way close to that in Bitcoin market. So Bitcoin market is kind of indicating you that June can be that date. But remember, there is one key difference here. When you look at the market, you came back below and you put that bottom here. So if you consider this one, say this is the first drop there, which you can see like this, and this one is the second one, and it's after the second one we moved above the moving average and started the rally. So this particular shape of U bottom here tends to show you that's the reversal sign. Now you come back here. Okay, I'll just clear all of this to keep that number of days in check. Say we started from here and reached here, say 800 days, 850 days. After the break day, 800 days, fine. Now when you look at this, it's getting interesting because it's only 350 days, because it's from here where you got that point that we are going to end this bull market. But in the actual pattern terms, as we cross above the moving average, this is like halfway through. So 800 days means we are extending all the way towards next year. That's one more year in a bull run. Now a lot of people will be getting confused there because they are kind of new to the market. So instead of just looking at this chart which starts from 2014 here, you can actually look at BTC chart, which is kind of from Coin Paprika itself would be better for you. You go jump in and take this Coin Paprika chart, which kind of extends all the way down towards 2010. So now when you look at this 2011 wave, you are kind of looking at this. Okay, fine. The market is kind of trending higher. The price is moving higher. So from 2010, we moved up, we came back, we moved up, we came back. So this trend is still continuing. Now, if you look at this particular step here, you had something similar. You went, touched the moving average, you came back down and then crossed it, right? So from here there is something happening. So this is 546 days, and from here it extended towards 800 days. So do you expect the market to do the same? Yeah, it should do the same. Why? Because the number of days is actually increasing here. Here was like 550, here it's like 800. So you can say 1,000 days. So even if you are counting from here, the first point, which won't be accurate, we are still getting extended somewhere till December, Jan next year. Now, to be precise, if you put that into perspective from here, which is what the market is suggesting you, it would be extending towards all the way to half. Mid next year would be something which you would be eyeing at. Now, remember, that's another year to go. And within that year, if you are having a long-term consolidation, say here in the altcoin market, when you look back at it on a weekly chart, as we just talked about here, you had a consolidation of around 340 days. Then it popped the second wave, and second wave is the most volatile wave there. So if you take that into perspective of ROI to understand from this bottom till this top, altcoin market just did like 10x there. Fine. After the consolidation, it went up like 66x. So now that's huge, because if those who have held on from the bottom and stayed through that consolidation just made a huge whopping 380x, right? And then we consolidated again, and in the entire altcoin market we moved up higher to create like around 18x. So now those who have held on even during that volatility made like huge hegemonic 1800x. Okay, now put that into perspective in the current waves. From the bottom, you actually made around 33x as of now, which is like the half of just the second wave. From the bottom, now, just to take this into the perspective, from the bottom till the top of the wave 2, we did like 336x. To put up, my mistake, 366x. So remember 10x, and then those who have held on, they just made like 366x. Just the wave 2 was 66, and those who held on from the bottom got 366. And in this wave, as of now, we have only done 33x from the bottom. So as we consolidate here, the chances are high that a lot of people would be moving out because they are hard on time, because they don't have that much time. Now, to put this into perspective, if you look at this, you can clearly see a rounded bottom pattern coming up here, which if you look, you kind of get something like a head and shoulder, inverse head and shoulder pattern here, but it hasn't actually completed. That means the chances with this pattern and the price consolidation are still going to be valid. Now the MACD needs to slowly consolidate, right? Now if you go back, zoom in time and look at the MACD, you will understand one thing. As we were moving higher, MACD was getting this signal. It's topping out, then it consolidated there for that long time and then moved even way higher. So when you look at the MACD and just feel like, okay, this has gone way past all these guys, no, it hasn't. There's a lot of room, because this is one of the rule which the best investor of all time, Peter Lynch, also highlights. Don't say this asset can not go much higher because it has done this much. Only position yourself understanding that. Meaning if your exposure is too high on that particular asset which has done 500x, which have done 1000x, yeah, it's better to reduce your risk exposure there. Now that's where we are looking at all of this, right? Because the fundamentals, it's different, right? Because for individual assets, you're seeing huge fundamentals as we go forward, and then institutional investors are showing this signature saying, we are dumping Bitcoin to go back into gold. Now for me, I get a little bit skeptical because it's coming from JP Morgan. Because when the market moves a little bit down, what JP Morgan usually does, in my opinion, is talk the market down and then buy at the bottom, because they are institutions, they does this, right? That's how they make profit. But the problem for the retail guys is this: majority of the crypto exchanges just went broke, right? It didn't actually work well when the people really wanted to buy in at lower prices. A lot of exchanges were, it was not literally allowing you and me as the retail investors to move in and buy, whereas the OTC markets would be still working, the price is same for them, and they are buying all the way from there. Now, as you look at the individual assets, say let's actually talk about XRP. If you remember, we talked about XRP showing this parabolic curve comparing with that of BTCs, and I told you the possibility of XRP moving towards this parabolic shape is higher, and right now we are getting closer to that. Remember, this is a weekly candle, so if you get a couple more weeks of consolidation here before we move higher, don't be irritated, because in XRP BTC pair, this is what you are eyeing right now. The price is moving higher, it's having that ascending bull flag here, and you're getting the same, something similar here in the RSI too. So as you consolidate, get congested here and break to the upside, that's still bullish there in that pair. Now remember, BTC is dropping, so as soon as BTC slows down, we may move higher. Right now XRP came back to this support level, which was acting as a resistance previously, then turned into a support. Right now we are retesting that bottom. See, right, last time when we came to the downside, we literally touched 0.96, 0.98 depending upon which exchange you look at, and this time we came to 1.05. that means a higher low. Now that's what we highlighted in the initial part, as we are still inside this particular pattern. So once you move within this pattern and break above, say next 15 days, 20 days, we don't know. There's a daily chart, right? That's not the weekly chart there, it's a daily one. So as you move through, this becomes more clear. But once you are moving entirely out, liquidating your positions only because the market is showing you that red day, that's when you really lose your money. If you want to make money in this market, you should be eyeing to buy when it is red. Do you remember the words saying, buy when there is blood in the streets, even if that blood is yours? That's how you become stubborn and make money in a market like this, because this is the most riskiest asset class which you can trade. Now remember, every asset kind of went yesterday to the downside. Crypto, commodities, you look at silver, gold, crypto, all these kind of assets went down, even though it's safe haven assets. One of the reasons for that would be from here. When you look at this, the central banks are increasing the balance sheet. They're just printing. Now look at this and say money is growing on trees. Now for me it looks like that. So when people say, okay, this crypto cannot go to that market capitalization because there is no much money there, I'm like, no, it's still possible. The central banks are there, right? They'll just print like they have a ton of diarrhea, right? So that will continue. If you just look at 2020 until here, that was monstrous. Now you go back in history and look during World War, how it was being printed and what was the ratio of increase, and right now what's happening, you will understand what I'm pointing you towards. Don't just get into this type of FUD from the institutional investors, because we have already went to the downside. Now they've talked us down, they would be buying at the bottom, whereas the retail investors, look at Tether has been pumping to the upside, right? So as the market was going to the downside, Tether was moving, meaning a lot of guys, those who had a little bit of profit, those who were in red, they closed and moved into Tether, stable coin. They just want stability. But if you want to make money in this market, you should be in the market when the price is dipping. You should be trying to catch, if it's me, I would be trying to catch that falling knife. Now I know I won't be able to get the exact bottom, and I missed it, I agree. But the story here is you end up some way close to that bottom. Not the exact bottom, agree, but some way close to that bottom. And when the market rebounds, you are in profit. And you make more profit because you try to catch that falling knife. So always remember, it's your money, your positions, your portfolio. Do educate yourself on a regular basis so that you understand what this market is suggesting, so that you understand what these patterns mean on a short term and long term. When you're breaking above this long term resistance line, you get indications. Don't miss that one because it's feeding on towards the future opportunities. That's why I highlight that keeping 10 to 25% of dry powder at all times gives you that ability to buy back when the prices come near the support. Even if you don't get the exact bottom, that's still fine. When we bounce back up, you are in profit. So guys, I definitely believe you received value for your time, and if you did, please do support the channel, hit that like and subscribe button. If you want these kind of updates for your portfolio for various different assets, you can look at the Patreon. The link is given in the description below, where I have actually posted a lot of different assets on a regular basis, and if you would like to, you can subscribe to that one. I'll meet you guys on the next video. Bye for that.